Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 13th of May 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's take a look at the overnight changes and price moves to be aware of. Of course, as it's Monday, we'll start with a look at these on a weekly basis, which I've highlighted here. And really it's a report of contrast this morning. We've got differing fortunes for European majors. For instance, the euro here rallying on the week against the US dollar by 0.30%, whilst its near rival, the British pound, was down by 0.67% against the greenback over that period. Elsewhere, we've seen contrasting fortunes in Asia, with the yen strengthening against the US dollar, adding 0.89%, 0.89%, yep, there we are, against the US currency, whilst the Chinese yuan has been heading in the other direction. The dollar's gained there by 1.69% against the Chinese currency over the last 7 days. Dollar index for its part over the week down by around 0.19%, so not rallying perhaps as we might have expected it to, onto a bullish stance from the States on trade. Elsewhere, over the weekend we saw a further pickup in some of the prices of cryptocurrencies. Bitcoin was in the vanguard of those. As you can see, over the last week, Bitcoin's price has appreciated by 24% or more, and that takes into account a bit of profit taking in early trade in Asia this morning. So the crypto space seems to be coming back into vogue once more. Okay then, what's on the calendar? Events that may move the markets today. A pretty light calendar once again to lead us into the week. We've already had home loans and investment lending data for the month of March out of Australia. Numbers there were pretty poor, I think it's fair to say. We also saw a mixed bag from leading economic index data and coincident index data for March, this out of Japan. One substantial beat, to be fair, and one disappointing miss in that pair. To come this morning, the first of our central banker speeches on the day kicks off at 7 o'clock GMT, and this from the Reserve Bank of Australia's Governor Bell. Then we pause until 13:10, swapping over the Atlantic for not one but two US central bankers. First of all, the Fed's Rosengreen speaking, and then Fed Vice Chair Richard Clarida also talking at 13:10. There'll be 3 and 6 month bill auctions out of the US this afternoon as well, and then 21:30 p.m. this evening we're in Canada for a speech by the Bank of Canada's Lane, and we pause once more until 22:45, crossing over the Pacific for details of visitor arrivals in New Zealand for the month of March. And then we swing round to Japan at 23:50, where we'll have bank lending data for the month of April, current account data, this is for the country of course, non-seasonally adjusted for the month of March, and a look at trade balance data for the month of March as well. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. And firstly, Chinese state media hit back at the US over a failed round of trade talks, saying that China doesn't want a fight, but is not afraid of one if it comes to that. There are hopes that Presidents Xi and Trump may meet at June's G20 summit, the Chinese media says. Meanwhile, the White House is expected to update the markets today on its plan to add tariffs to a further $300 billion worth of Chinese imports. So it certainly seems that the Americans are deploying a strategy of the carrot and the stick, but there seems to be a bit more stick than carrot at the moment, if I can put it like that. Saudi Arabia has said that 2 of its tankers, that's crude oil tankers, were attacked in waters near the UAE on Sunday. That claim followed earlier reports of sabotage to 4 UAE vessels, says the FT. And finally, food inflation in New Zealand fell to its lowest rate of growth for 4 months, rising by just 1% during the month of April. That was principally driven lower by slumping fruit and vegetable prices in the country, which fell by 4.1% in the period, following falls, I believe, of 2.6% during the month of March. And of course, the food inflation will feed into the wider inflation figures, and that in turn could well influence the Reserve Bank of New Zealand's attitude to interest rates going forward. Okay then, food for thought and something to take away with you into the trading day and beyond, and why not think about this? US equity markets swung sharply on Friday as sentiment over trade talks shifted throughout the day. Against an uncertain background, the ride-hailing and delivery business Uber floated in New York. However, its shares fell by more than 7% below the IPO price on day one, and that bucked a decent trend in IPOs recently, in big IPOs recently, which have at least on day one traded to a profit. Here is a chart compiled by the FT and others, which looks at some of the largest and most high-profile IPOs, shall we say, of recent times. Beyond Meat, Netscape, Twitter. Of course, some of these are back in the day. Levi Strauss more recently. Lyft itself here, IPO there. Uber's IPO here. You can see that Uber ducked the trend for a profit in big IPOs. The question we need to answer really is to decide how much of that was stock related, how much was related to the wild swings in the markets based on trade, and was there any kind of bellwether or ringing the bell at the top of the market as far as Uber's concerned. I suspect we'll get a clear idea about that as to how Uber trades over the next coming days, and then we'll know a bit more about what market sentiment is towards these high-profile, high-tech IPOs. Okay, please do take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage accounts for you, then please do take the time to contact your Pepperstone account representative who will take you through those. And as I say, do take a moment to read this risk warning thoroughly, please. Thank you very much for your time today.